Hi, everyone. We're back this week with super interesting stories for Ali Talks Tech Weekly Roundup. This is Ali Hussein Qasim. In this week's roundup, I'm looking at a couple of super interesting stories. I'm going to start with Moniepoint Group, which is a Nigerian, I was about to say Fintech, but I think the way these guys are evolving, we just call them a financial services group, and I'll speak to why. They have just secured regulatory approval from the Competition Authority of Kenya to acquire Sumac Microfinance Bank, which is one of the few deposit-taking finance banks in Kenya that have been up for grabs. I'll come back to that story in depth. But the next story I'll be covering is Safaricom's rollout of its business solutions suite with partners like Pezesha, KCB Bank, DTB, and which is the other bank? How do I forget that bank? And we'll come back to that story with a full suite of partners that they have put together. And I'll explain why this is potentially different. I've been asked by a couple of people, what's the difference between this and Fuliza? So we'll come to that. Then we'll speak to insurance and how Equity Bank has reported its Q1 results. Insurance is starting to become a big aspect of Equity Bank's reporting, and we shall see whether insurance is the next big play in financial services in Eastern Africa. My last story is moving to DRC, where two Kenyan banks, KCB and Equity Bank, are potentially facing some headwinds regarding ownership, with the regulator announcing 45% local ownership of any financial services player in the country. So let's go to my first story, Moniepoint. Why is this interesting? Why is this story of Moniepoint's acquisition of Sumac Microfinance Bank, deposit-taking microfinance bank in Kenya, interesting? A couple of years ago, the same financial services group from Nigeria acquired Kopo, which is a Kenyan fintech focused on merchants, payments, and enabling merchants in the retail space in Kenya. Now they're back with an acquisition of a deposit-taking microfinance bank. So let's take a step back. Let's look at what exactly is Moniepoint and where they have come from. And what I did is I did a quick prompt on my Perplexity platform, perplexity.ai platform, and I simply asked, I know, but I just wanted to get a quick overview of what Moniepoint's core business model today is and where it started. So let's start by Moniepoint started as a platform for full business suite for micro and small medium enterprises in Nigeria. Today, Moniepoint operates an all-in-one digital financial services platform that is designed primarily for businesses, especially small and medium-sized businesses across Africa. Its core business model is built around providing integrated financial solutions that help businesses manage, grow, and streamline their operations. So this is a synopsis of Moniepoint. Today, the key components of Moniepoint's business model is one, full service business accounts. So that's that evolution now. We're starting to see an evolution from a pure fintech play to a bank play, fully integrated. Fun fact, they acquired a microfinance bank license in Nigeria a couple of years ago. So they have a full service business account. 2, payments processing, completely integrated. Now, this payment processing is not just online. It's multiple channels, including POS, terminals, online gateways, mobile payments, and bank transfers. Then they have credit and lending. This is a group that is truly integrated. Their own applications and their own payment systems fully integrated, as opposed to what we see with other players where they have third-party solutions plugging. These guys have built in-house a full suite of services that are combining both fintech and traditional financial services. Then they have business management tools. This is interesting. Moniepoint offers value-added services such as expense management, analytics, inventory tracking, and customer relationship management, often bundled as premium features with subscription fees. So they also run a software as a service business, a SaaS model for all their micro and small medium enterprise business. Banking services we've mentioned. So what are the revenue streams for this play? Transaction fees from payments and withdrawals, interest from credit facilities, subscription fees for advanced business tools, revenue sharing from partnerships with other financial institutions. This is an interesting play. In terms of what they're possibly going to be doing in Kenya, you can start seeing by looking at what they're already offering in Nigeria. From a maturity perspective, this is a mature business. And recently, they have raised a substantial amount of money for growth and for potentially acquisition. And we're starting to see where that money is going to go. Interesting times. If we look at the Kenyan perspective, this is the 4th substantive acquisition of a microfinance bank by fintechs. Let me repeat this. This is the 4th acquisition in Kenya alone by fintechs of microfinance banks. The first one was by Wakanda Networks, Choice Bank. We know Choice Bank today is become, in my humble opinion, one of the most interesting banking as a service plays in this part of the world. The second one was Branch International's acquisition of Century DTB, Deposit Taking Bank, Microfinance Bank, and the third one by Umba, which acquired Daraja MFB. So, how is this playing out in Kenya, which is one of the most important fintech markets in Africa, and in other African markets? We're seeing Nigeria, where players like Moniepoint and Fair Money and Flutterwave are becoming big players. If you take Fair Money, for example, you have a fintech that has a deposit taking microfinance bank license from the Central Bank of Nigeria with integrated fintech services. This is the 3rd largest lender in Nigeria. This is a fintech. 3rd largest lender in Nigeria as of 2024. So you're starting to see these Nigerian players coming in to the Kenyan market with some very serious intentions. I asked my son Hashim, who seems to speak Nigerian English. Please don't ask me how. I told him, tell me, how do you say in Nigeria that these Nigerian fintechs are not playing now? Please excuse my massacring of this Nigerian English, or is it Pidgin English accent and stuff like that, but I just loved what he told me. He says, Nigeria no they play, oh, we go run So these guys are not playing. They are coming into Kenya and they are coming into other African markets. I have a big question mark. Question. Again, I've always asked this question for a while. Why is it that Nigerian financial services players, both from traditional perspective and from fintechs, they are all over the place? Kenyan players, except for a few handful, and these are fintechs mostly, the banks are not really venturing beyond Central Africa. Food for thought, guys. Now we go to my next story, Safaricom's M-PESA rolling out a mobile-first, digital-first banking suite for Kenyan MSMEs. Now, guys, a couple of years back, I did a post on LinkedIn, and I simply said, M-PESA is a bank without a banking license. And a couple of my friends from Safaricom really had a lot to say about this. But guys, let me tell you something. Banking as we know it has completely evolved. Banking since the days of Hammurabi in Babylon is completely evolving. Banking as a service now is becoming super, super interesting. The partnership between M-PESA and a couple of these banks, CDN Bank, KCB, DTB, and wait for it, another fintech, Pezesha, which I am presupposing my good friend Hilda, my sister, has a play there where it's lending its platform to be able to attract all these MSMEs, do credit scoring and stuff like that. This is going to be an interesting one. So a couple of people derisively asked me, but what's the difference between this and Fuliza? This is very MSME focused. And with the data that M-PESA has, and with these partnerships, all I can tell you is go and download. If you are an MSME, go and download that M-PESA for Business app. It's going to be something interesting to see. In fact, I'm going to talk to my executive producer here who apparently runs a side business. He needs to open an M-PESA for Business account. For real. Guys, this is going to be an interesting one. And the thing for me that we need to start paying attention to with these platforms is beyond lending. We are seeing how Moniepoint and players like Fair Money, and by the way, locally, PesaPal also has entered into this space. We are seeing how this evolution is moving towards. It's not just about lending. It's about all these other services that are being bundled together. Business services, mini ERPs, payments, platforms to analyze your business expenses, ability to be able to accept money in advance and stuff like that, software as a service payments. These are going to become super interesting in the MSME ecosystem across Africa. My next conversation is on insurance. We have seen over the last couple of years a couple of banks in Kenya creating banking groups and starting to play in the bank assurance space. A number of them have decided they will acquire or start insurance companies from scratch. NCBA acquired an insurance company. ABSA also acquired an insurance company. Equity Bank decided to go the greenfield way, start an insurance company from scratch. Now, we are starting to see some interesting traction around this. In the latest report, investment report from M-PESA, from Equity Bank, Q1, Equity says they now have 4 million policy holders, with plans to scale this via digital channels and Equity's huge retail base. Now, when we talk about digital channels and financial services in Kenya, Equity is almost ubiquitous. From the days of building FinServe to the days today where mobile money and mobile payments and digital banking has been completely integrated into Equity's offerings. Now come insurance. Are we going to start seeing a tick in the growth of insurance penetration in Eastern Africa, in the areas that Equity is playing? Because honestly, insurance penetration rates in this region are dismal, going down from 3% a couple of years ago to now below 2.6%. So this is me cheering on Equity Bank. Let's see whether they will transform and disrupt this space. Last story is on Kenyan banks facing a DRC ownership shakeup. And these are two large banks, number one and number two, actually, incidentally. KCB Bank Group and Equity Bank. Each of these banks have acquired local banking groups in DRC. That's the Democratic Republic of Congo, with its headquarters in Kinshasa. And all of a sudden, the regulator has come up and said, guys, you need to cede 45% ownership of these banks to local Congolese. Now, these two banks currently have 80% of these banks. 15% is already owned by locals. So the regulator is saying you need to cede 30% more, which leaves them with 55%. Literally, the $1 trillion question is, if they don't get exemption, they have requested for exemption. If they don't get exemption, and I suspect this is going to be a geopolitical conversation, I suspect this is going to be something that the political leaders of these two countries probably have to get involved in, because ceding 30% is going to be quite a substantial amount of shares for these banks to just let go just like that. This is going to be interesting to see, and it's going to affect the expansionist trend that we are seeing with Kenyan companies in the Central Africa region. How will other countries react to this? If this exemption does not go through, how will it affect these banks? I think this is an open-ended question, waiting to see how that will pan out. And with that, ladies and gentlemen, I close this week's weekly roundup. I look forward to having a conversation with you guys next week again. Asanteni sana.